Welcome everyone. Today I'm going to be going over a question that I get a lot from my clients, and that is, Tom, which should I invest in first? Stocks, private money lending, or real estate? Let's get started. Welcome back everyone. So today's an interesting one because we're going to be talking about something that I get a lot from my clients, and it is the question of how should I get started investing? Should I invest in real estate first? Should I invest in private money lending that produces cash flow? Should I produce in stocks first? How should I go about doing it? And this really comes to fruition when my clients have a little nest egg built, hitting our target of 20% of your net income in savings. Once you do that and they get enough in their nest egg, they now have enough to save and invest. And so I get the question a lot, how should I invest it? And there's a lot that goes into this question, okay? Now, again, just today I built out a plan for one of my clients, a 5 to 7 year plan. And most of my clients are not people that have a huge amount of money. And if they are, then they probably already have it figured out. So what I come across a lot is that confusion. And how I look at it is in a number of ways. I think when you're first starting out, I think putting your money in an IRA or 401k is pretty dumb, to be honest. Now, if your company is matching dollar for dollar or even half of every $1, it's absolutely critical that you max out that, because that's free money and you're probably not going to get that low amount of risk for such a high return. So always max that out. But if you don't have that option, and even if you do, you'll still want to save more money beyond that. And when you start to invest it, you're going to be considering where you want to invest it. Now, I believe that the first step is to really build that foundation of income producing assets, right? So before you start buying stocks, you need to think about how you're going to go about producing that income. Now, stocks don't really produce income. They can in the form of dividends, but ideally you just reinvest those dividends into stock, and over time your portfolio grows. Really, it's a paper asset. It doesn't really produce cash flow to your pocket. So in my opinion, of the three, private money lending, hard assets, or real estate, stocks, you only start investing in stocks when you have your portfolio of income producing assets built. So how do you get there? Okay, well, we know it's not stocks. So my first step is I tell people start with private money lending. Okay, start by building up a consistent flow of cash flow that you then recycle back into your portfolio of savings. And then usually around years 2 to 3, you have enough money saved from that private money lending that you can add one property of hard assets to the portfolio. And you do so because real estate in total is going to offer the highest return out of any asset that I've seen, right? And that comes from a number of categories and variables, and we have that in a different video as to why I favor real estate over stocks. But in general, real estate is going to provide you a 6 to 10% return on your money as cash flow to your pocket. So you don't want to put all your money there first because it's not going to be the most rewarding from an income producing asset standpoint. Private money lending will be, though. You're probably going to make between 12 to 16% annually on your money. That's pretty good for a passive investment, and that's right to your pocket. You then take that, recycle it, rebuild the savings, and continue to grow that. Now, over a 10 to 12, 15 year period, once you have a huge amount of wealth like the rich do and whatnot, you're going to be pretty diversified across all three asset classes. I'm all for stocks, but I think it's more for someone who's more advanced, someone who has already built a nest egg of assets that produce income. And so for me, my rank goes private money lending first, build that up, invest in real estate as well, tax benefits, appreciation, equity pay down, all that, and then begin to funnel some money into the stock market, okay? So that's my take. Give it a thumbs up if you like what you heard, and if not, curious to know why you don't disagree. And for all people out there, be sure to subscribe. Thanks.